Hello, everybody. Welcome back to the Daily Covered Caller End of Day Edition. Thanks for tuning in. I appreciate it. Today, we'll look at the heat map. We'll see how everything finished up. We'll put the microphone a little closer. We'll look at Apple's earnings. They are out. We'll look at the buffer report, see how everything's doing. We'll check out the Defiance trades and the Yield Max trades. We'll look at the profit boxes anyway. We'll look at the Tesla crash delta neutral trade as well as the New Year's baby trade. Okay, let's start with the heat map. Boy, look at that. I mean, Qs were down 3 points yesterday and 2.42 today. My Lord, that's an ass whipping. Not to skip ahead too much, but let's see how much triple QY lost today. $4.5 million. They were trying to make two. They made three yesterday, but lost 4.5 today. Anyway, kind of a tough day today for some of these stocks. Only thing that was really up is inverses. Bonds a little bit. TLT was up half a bit. But, high yield bonds were down. Anyway, okay. Tough day there. All right, Apple's earnings are out. Let's just go. Apple breaks out of recent sell slump as it gears up 3 minutes ago. Okay. Well, anyway, Apple's earnings look good. Apple snapped out of a prolonged sales slump during its most recent quarter as the trend-setting company prepares to launch into the artificial intelligence craze with an arsenal of new technology that's expected to juice demand for its next iPhone. All right. Apple boosted its sales from a year ago, a welcome reversal of fortune on the heels of 5 consecutive quarters of year-over-year revenue declines. This time around, Apple's revenue rose 5% from a year from 85 million, a figure that is expected to exceed analyst projections. The Cupertino, California company earned 21 billion or $1.40 a share, an 8% increase from the same time last year. The profit also topped forecast. And it's saying the shares are up. Let's look and see what shares are doing. Yeah, 219. Market Apple closed at 218. They're at 219 in the post market. So we'll see how they open up tomorrow. A bunch of other companies had earnings also. I believe Amazon had earnings and they missed. Look at this. Their stock's all the way down here at 175. They, investors must not have liked what they had to say. So we'll see how these open up tomorrow. Intel also did not have great earnings. Okay, let's check out the buffer report. And this is just the I was making sure I didn't have the banner up. Sorry, I did that yesterday. These are just the indexes, basically. There are so many of these funds now. And I didn't even get all of them. I forgot to put 2DTE on here. I mean, well, I forgot several of them, but But I got a lot of the main ones. I got the ones I care about. SPY-T. Look at SPY-T today, catching almost all the downside. And of course, we'd expect that. Unfortunately, those are going to be bad on the downside. Those are built for upside. Those are built for upside. JEPY. Now, these are built for downside. And this one actually did worse today. So for whatever reason, that's not supposed to happen that way. All right, JEPI. JEPI did really well today. I wonder if that JEPY is a bad quote or something. Let's look over here. There's no way JEPY outperformed on the downside. No. Down 1.59. Yeah, I guess so. I guess so. All right. But in any event, there's all of them. So here's an easier way to look at it. Let's just look at it on the chart. Okay. I tried to put all the S&P based indexes right at the first, even SVOL, which is loosely based on the S&P, or loosely derived from the S&P's returns, let's just say. So in the best one out of all of them, you're going to want to say was CHIP-I. That was a great one. The worst one out of all of them was JEPY. Looked poor, and iSPY did not look great either. The rest of them are about what you'd expect. Okay, let's look over here at KQQQ. KQQQ is built for upside. They don't have a lot of buffer. And sure enough, they caught almost all the downside. They didn't catch as much as WiMAX did, but they caught a lot of downside. You can see FEPI did pretty well. FEPI did pretty well. QQQI did all right. Really, WiMAG looked really good, showing a lot of good buffer. QYLD looked decent. The Goldman Sachs one, GPIQ, caught almost all the downside. ULTY caught all the downside and then some. These other ones are some random ones that we don't really look at that much. Bonds were one of the only thing that was up today. I mentioned the TLT was up half a percent. There it is. Or it was actually up 86 bips. TLT was, but the high yield fund TLTW was actually up 61 basis points. All right, so let's go from here to see the bloodbath. This was definitely a bloodbath, a $4.5 million loss. I forgot it, but they lost $6.7 million in the middle of last month. And they lost 5.1 early on, or midway through the month last month. Last month was really a bad month, so I guess that's not saying that much, but $4.5 billion is a gigantic loss. It was a lot worse earlier in the day. The market rebounded quite a bit, a little bit. I believe the NASDAQ turned up right at the end of the day. Saved themselves a little bit of money. It's still a bloodbath. It was worse when I checked it earlier. All right, so we'll look at JEPY. The chart's going to look basically the same. Now let's check the spreadsheet and see how much money, investors' money, they bled off today. 1.2 million. It's about twice what they're trying to make. Down 9 cents on the month. The good news is the dividend estimate's up. Distribution estimate's up. Look at IWMY estimate of $1.21. But there was some carnage on their balance sheet also. They lost $3.6 million, which is maybe more than they've ever lost. Well, I'm scrolling back through and I don't see any 3.6s. I do this every day and I don't remember anything that big. That was a gigantic loss by these guys, 2.7%. Wow. All right, well, let's look back over at the buffer report. I was wondering why I didn't notice it, but I don't think I have these guys on the buffer report. Oh, gosh. All right, now let's check out that chart and see. Yeah, well, this would have stuck out too. I just didn't have them on there, but actually they didn't underperform that bad. Their index was down about twice as much as they were. Okay, well, that's not as bad as I was thinking. All right, well, anyway, we need to check out IWMY. A lot of people like that fund, but still, suffice it to say, it was not a good day in any of these funds, especially not ULTY. Okay, let's go back over here. Let's look at USOY. Now, USOY today, sold some options, some 78 strike price options for $1.22. They don't expire till tomorrow. Let's look at the chart and see what kind of shape these guys are in. Okay, well, they have a little bit of work to do. Their market sold off today. They need to get to this, at least to this bottom of the line to break even. For their trade to break even, top line or above to make max profit. So we'll see what the price of USO does tomorrow. Those options expire tomorrow. Now, let's look at the Tesla crash pairs trade. Okay, well, the pairs trade was up a 1.5 today. The pairs trade did great. So far, it's yielded 13.2%. The overall return since inception of the pair is down 7.5%. But you could see this red line is the return, including the distribution or the dividend, whatever you want to call it. And it's definitely trending in the right direction, at least for the past couple of weeks. All right, so now let's look at it this way. Okay, I didn't draw the profit boxes out far enough, but they're supposed to come out to there, right? And that may not even be far enough. Friday, 12, 1, 2, 3. Actually supposed to come out to there. All right, I'll finish those tomorrow, but before our report tomorrow. But as long as it stays between the lines on here, this pairs trade is doing great. Now, there's still some people that own Tesla by itself or Crash by itself. So if you own Crash by itself, you're rooting for the price of Tesla to go to 210, which is the bottom line at the bottom box. If you own Tesla by itself, you're rooting for the price to go to 235 by tomorrow's expiration. All right, so we'll see. We'll stay on top of that. We'll take a look back at that tomorrow around lunchtime. Or after the market's been open for a while, we'll see how it's trading. NVIDIA, same situation. They have a bullish yield fund and a bearish yield fund. They've actually busted some of their strike prices of their bearish yield fund out. They've almost jumped the strike prices of all three of their. They really don't want the price to go under 107. People that have the bearish NVIDIA yield fund. It's called DIPS, DIPS. In any event, when the market bounced and rallied, it kind of rescued those people. But the bullish fund is looking all right. The bullish fund is NVDY, and it's a great fund. It's outperforming the parent today, which is good. It's only down 5.9%, where the parent's down 6.6%. We don't have a buffer report yet on single stocks, but if we did, this one would be doing a good job or doing what we'd expect it to. All right, so here's Mr. The high yield fund is Misty. Their profit boxes are still way out of the money, so their calls are in no danger of going in the money right now. All right, so we'll check out Coinbase. Also, I didn't draw the profit boxes out far enough, but you can see Coinbase has some, they have a bearish fund. It's called Fiat. Well, in any event, they've jumped. They're in the money. Their strike prices are in the money. So anyone that has the bearish fund, it's no longer being able to capture upside. It's capped now. So people that are trading the spread, if Coinbase keeps dropping, it would be bad news for people that have the pair, not the spread. The people that own the pair, that own Coney, which is the bullish one, and Fiat, the bearish Coinbase related high yield funds together. So, of course, you aren't just owning them for the NAV. You're also owning them because you're catching a dividend from each side. And so, but these two haven't been around long enough to pay a dividend yet. They've been around 3 weeks. And the first week, it jumped the bullish strikes. So the bullish side was capped out. So the bullish side would be Coney. Then they rolled the strikes, and the next week everything was fine on the pair, and the next week everything was fine until like yesterday, and now they jumped out. They jumped the bearish strikes this time. We'll see what happens. We have another day to go, so the price could always come back. Let's look now at AMD. AMD doesn't have a bearish fund yet. This 155 strike is rolled out to next Friday. Here's Amazon's chart. Sorry about that. Amazon's calls are in no danger of going in the money, so that's good. That is good. All right, let's see what else we should check out. All right, so New Year's baby trade and other earnings trades. Let's just see how they're doing. I really like these earnings trades. I've shown some content on them. I usually just do a double diagonal or a straddle strangle swap. I talk about them all the time, but anyway, I've saved a bunch of them. But Apple, for instance, is showing down $14. But I'm going to show you guys what's going on this one. They've announced earnings, and last I saw, the price was trading around $219, $220. Let's see, I got CNBC on. Of course, it's not going by right now. Roku's up 6%. They had a good earnings report. Meta looks good. Anyway, let's say it's trading at, let's say tomorrow. This right here is Friday at 9. So tomorrow morning, let's say it opens at 219, or well, yeah, let's say it opens at 219. This trade will be worth like $400. The only way it would lose is if Apple drops, 5% from here, and the announcement's already out. It doesn't mean it can't, but it looks like this was a pretty good trade. It looks like this was about, it was an $800 debit, but it costs, so it's $800 worth of risk, but it looks like it's going to return about 50%, depending on where it opens tomorrow. All right, so that's a good one. This Meta trade, this one turned out, this is exactly how they're supposed to work. Here's what it's worth now. There's, as time's going to pass till expiration tomorrow, it could even be worth a little bit more. But that one was a good trade, returned about $700 on about $700 worth of risk. And it was theta positive, remember, which means it's collecting time decay. And it's one of these trades where you have a 2 out of 3 chance of hitting it because you're selling options primarily. So in any event, I love these kinds of trades. I'll do some more content on them. They're doing pretty well. They work out really well during earnings season. So I do a lot of them on earnings stocks. Look at this one. Here's a different kind of trade that I haven't had any content on yet. I need to make some content on this. This is a different kind of spread, but it's if you could put it on, it's risk-free. Any event, we'll see how it's theoretically risk-free. Lots of times this is a calendar spread. Lots of times you see a calendar spread and it looks like it's risk-free. But then after the trade actually happens, this is based on Apple. So tomorrow, once Apple's earnings actually come out, and the volatility sometimes of the near week versus the far week does something funky. And sometimes these ones that are theoretically risk-free, they actually do have a little bit of risk. So I kind of just saved it to see if it turns into a loser, because some of these ones that look risk-free almost always turn into losers. So we'll see what happens. We'll see what happens tomorrow on this one, but you can see the profit. This is the graph right now. It looks like it does kind of have a valley of death around 210 or something, but as long as the price stays firm, and last I saw it was at 219, as long as it's at 220 by the morning, here's 7, here's 9 a.m. in the morning. Now, like I say, that's if these relationships hold. You know, sometimes what will happen is by the morning you'll see something like this, and you'll go, "Damn, I thought it was risk-free." There's really no such thing as free money, of course. This is a lower risk trade, because the thing about this kind of trade, and I'll make some content on him, you don't have any black swan risk. Because no matter what happens, it doesn't matter how low Apple goes or misses by, that minimum you can make is locked in. You can, if something crazy happens, you can have a big valley of death, but you're going to make 114 no matter what if Apple crashes. So it has built-in black swan protection. And if Apple goes the other way, if something crazy happens, it goes the other, you can't lose from an extreme event. So these are good trades to do also. And I'll do some content. I'll do some content on these theoretically risk-free trades. One of the only reason you could even do them in theory is because commissions are free most places, or even where they aren't free at Tasty Trade, they're cheap enough you can do trades like this sometimes. So anyway, I'll do some more content on those. All right, guys. Well, I appreciate you guys being here. And I've kind of forgot about this trade, but let me see. These are fun trades to do. Let's see, there's another one here. Yeah, here's one on Snap. And Snap had earnings after the bell. So I did this yesterday, and it looks like it's risk-free. I wonder, by tomorrow morning, once these options open up and start trading, sometimes the computer underestimates the change in the relationships, because you're selling one week and buying another week. So it's a fairly sophisticated trade. But we'll see. It's looking like, if things stay the same, it's looking like by the morning, by 9:15, this trade could be worth, no matter where it is, it looks like it could be worth money, but possibly, a couple $100. And it cost $184 to try. We'll see what the problem's going to be with this one. Shit hits the fan, it's going to develop a really bad valley of death right around here, but it still has black swan protection. No matter how low it goes, it's not going to lose money. And the most it can lose is the debit you paid, which is $184. Anytime you do a debit spread, well, not anytime, but in this case, 184 is your risk, your max risk. We'll see. I think this ought to be interesting. I would imagine more likely, what happens more likely is this, something like this. We'll see, though. We'll see. I bet you this trade that costs $184, I bet you it could be taken off tomorrow for at least $150, $200, something like that. We'll see, though. These trades are fun. Let me know if you like these kind of theoretically risk-free trades. I need to think of a catchy name for them. So they aren't risk-free. There's no such thing as risk-free, but they are theoretically risk-free. So, all right. Well, I appreciate you guys, and I will talk to you later. All right. See ya.